Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
While the spirits of Christmas dawn upon us, markets have been in a slumber mode with nothing major to write home about. Asian markets today morning remained tepid on the muted holiday season movements. One data that was released yesterday was the consumer confidence data from the US, which sank unexpectedly relative to the median projections. And while market movements are muted, the political developments still go on. South Korean opposition now reportedly looking to start impeachment proceedings against the current acting president. So even that's something markets would be closely watching. Good morning, JK. Holiday season movements are muted. Is there anything particular you're tracking?
Good morning, Swaraj. Yes, I think there market had very little appetite to actually react to any news. Even that news has been much less, but markets have not been reacting much. In fact, the moves that we have seen overnight have been quite random. I'll come to that. Of course, the consumer confidence has declined by 8.1%. That was quite big. But what drove the consumer confidence lower was the enthusiasm on US election has waned, and the consumers are now back to focusing on the future business conditions and particularly on employment. So that's the reason why the consumer confidence actually come down. And then speaking of politics, I think this is a series of events that we have seen over the last 2 to 3 months, starting with some of the key countries in Europe, and then spreading to other regions. And apart from South Korea, which was in the news in the last 15 to 20 days, we have had even some troubles in Canada as well. I think the sitting prime minister is facing a no confidence motion in the next month. So that's something that the market will keep an eye on. So far, it has not created any major, upheavals in the market. But I think this is something that means the specific currencies or the economies are likely to face some, focus from the investors going forward. And yes, as I said yesterday, we had very random moves in the sense we had, the stocks that picked up again from the losses that it suffered in the wake of the Fed rate decision, which was a hawkish cut. Then bonds were also down. So the stocks are up, but the bonds are down. And meaning that basically the yields have gone up substantially once again. 10-year touched a new high of 4.59. 30-year also moved up about 6 basis points, although the 2-year, the near term, has actually remained within 3 to 4 bips in a range. And in the process, we have seen a steepening of the yield curve. So the forward tenor bonds are commanding a premium. This is clearly a reflection of not interest rate moves. It's more of the government spending and the government debt, which entails a lot of borrowing in the coming month, and market is really preparing for those supplies, which unless absorbed can lead to much higher spike in the yields also. So that's one thing. As far as stocks are concerned, yes, there some beaten down stocks are getting bought back, particularly in the tech, and this is surprising given the rise in the yields as well. As far as the dollar is concerned, not much movement has been seen because market is really now wanting to wait for what theme that will work, because what we have seen is in the dollar market every year in the onset of in the January second week, there is some new trend that emerges, and sometimes there are new themes, and sometimes some themes which are already there but not really priced in, those play out. So it's something market doesn't want to take any fresh positions. As far as the dollar is concerned, it's already moved up quite a bit. Whether it will move up further based on the expectations, or or whether there will be a sharper correction, or whether there will be some policy statement with regard to the dollar itself. This is something that keeping the market players very focused. In the meantime, we have had some statements and some of the outcome of the policy meetings, in the sense the minutes. Australian central bank minute clearly showed that the inflation is now beginning to slow down, while the economy is also slowing down. So, which means Australia is now much closer to a rate cut. Japanese central bank, after all, not being committed even for a rate hike in January. Now they are focusing on the currency, and one of the official is stating about one-sided sharp FX move in Japanese. And Christian Lagarde, the European central bank president, said Eurozone was getting close to reaching ECB's inflation goal of 2%. So that means, there's nothing much stopping the ECB from cutting rates in the coming meetings, and while even the growth has not been very encouraging in Europe. So these are some statements that the market is watching. They're definitely digesting these, and possibly we'll have better reaction to these numbers. And of course, as we start the new year, the very first big number that we'll be looking at would be the US non-farm payroll data that would probably come on the 3rd of December. So that will be the first trigger, and then immediately after the that data, the next Monday following that is when normally market gets into action. As far as the rupee is concerned, one more day and one more new low for the dollar. Sorry, for the rupee against the dollar. Importers buying quite a bit, and then of course year-end outflows also possible. And there are some. Normally, we have seen some commitments on the ECB repayments towards the year end, and even the government repayments happen because of December. So this demand, while there is no supply, is really highlighted in the price. And of course, we did have selling from the nationalized banks to some extent, that kept a lid on further losses for the rupee, but still it made a new all-time high. And this trend is unlikely to change. Of course, we may have going forward towards the end of the month, we may even have some year-end related inflows also. All that I'm trying to convey is that the moves are now more based on the flows rather than any particular view, and that will continue at least till the year end. Thank you.
Thank you, JK. And just quickly summarizing, the lower consumer confidence data released from the US yesterday reflects the refocus on the long-term prospects of the economy, of the consumers, from the election-related euphoria that was there in the markets till now. And we saw some random moves yesterday on account of thin markets. Stocks were up and even yields went up. US 10-year hit a new cycle high of 4.59%. So that's something that's something a little bit also on account of the thin market, on account of the holiday season that's been going on. Dollar has not seen much of movement, and minutes of the meetings released by various central banks show that the Japanese central bank is not being committed to a rate hike, while the Australian central bank seems to be closer to a rate cut, while ECB is also confident on inflation reaching its target. So more rate cuts for the ECB, that's what it seems as of now. For rupee, it was another day of new low, and lack of any major supply and a strong demand for dollars from importers and FIIs on account of outflows keep the rupee weaker. That's it from us today. Thanks for listening. Have a happy holiday season. We'll see you all on 27th, because 25th is a Christmas holiday, and on 26th there won't be any major movements to talk about. So we'll see you all on 27th, and have a wishing all of you a merry happy Christmas.